Hello and welcome to everyone who's logged in for this webinar. Welcome to the SECR Who, Where, When webinar. So this is a webinar in our series of energy related topics. This is on an energy reporting area that's not subject to registration schemes like the ESOS requirements, for example. But we thought it may be of interest to many of our low carbon consultants that also work in this area. So this afternoon we've got Sebastian Gray presenting on this topic. He's involved with it quite a lot with his company 2EA. Sebastian is on our LCC register as an ENMS specialist and LCC Ops, as well as the ESOS Lead Assessor register, and he's also an LCEA deck assessor. So just a brief introduction there, and without further ado, I'll hand over to Sebastian.
Thanks, Andrew. So welcome everyone. Thanks for taking the time to listen to this webinar today. Hopefully none of you are self-isolating. Today we're going to be looking at the government's latest reporting framework, which is Streamlined Energy and Carbon Reporting, or SECR for short. Within this presentation, I have covered where SECR has come from, who has to report, including when, how, and through who. And we'll finish with a look at the breakdown of what needs to be reported. And I've also at the end included a summary from our own workings of what needs to be covered in your report to kind of give you a bit of a head start. So a bit about us. We, as Andrew said, we're registered with CIBSE. We've been going for 11 years, but we've got about 25 years experience in the company, and we specialise in implementing UK and EU legislation across an array of sectors, and SECR is our latest one that we're currently doing since last year. So before we jump into the requirements, a little background on where it came from and its reason for existing, and this is a bit of a long one, but it's a good explanation to get a bit of history, is that in September 2015, the government put out a consultation called the Reforming the Business Energy Efficiency Tax Landscape, bit of a tongue twister. And then a consultation response was published in March 2016, and it set out the road to abolishing the carbon reduction commitment and raising CCR rates to offset this loss. Within that consultation, there was surprisingly significant support from industry for a mandatory reporting scheme to replace CRC. So the government then announced a further consultation, and at the time it was called a simplified reporting framework for introduction in April 2019. BEIS then launched its consultation in November 2017 for SECR, and some of you might have seen it held events at MX and at its head office in Victoria to kind of promote and engage the industry about the upcoming framework. Then the consultation then closed on the 4th of January 2018, and in July 2018 they released their government proposal response introducing SECR. Within this response, interestingly, they found that with CRC ending, CCR rates increasing, and the new SECR framework being introduced, there was a net societal benefit of around £698 million. From there, on the 1st of April 2019 last year, SECR came into force, and you can find it in the environmental reporting guidelines. If you Google it, you'll get straight to a government link. The version you want is version 2 and is dated March 2019. And I spoke to BEIS last week, and they have confirmed that there is not yet going to be a version 3. So who, where, what, and when? So who, SECR, as it says on the screen, will apply to all quoted companies and large incorporated unquoted companies that meet 2 or more of the following: at least 250 staff, an annual turnover greater than 36 million, and an annual balance sheet, balance sheet total greater than 18 million. In relation to turnover for charitable companies, that should be taken as the reference to the charity's gross income or operation. In relation to quoted companies, this does, in this respect, are those whose equity share capital is officially listed on the main market of the London Stock Exchange, or is officially listed in a European Economic Area state, or is admitted to dealing on either the New York Stock Exchange or the NASDAQ. In relation to where you have to put your SECR report, this goes through into Companies House, and if you're a large incorporated unquoted company, I'll be saying that a lot, SECR will be reported annually through directors' reports. For LLPs, it'll be in their annual reports, and in the case of charitable companies, it's through the combined directors and trustees annual report. You'll notice there isn't a mention of public companies. The reason for that is that most public companies do not have to do SECR. It is a bit of a legal area, and I will read what it says in the guidance just to give you an idea. It does say, for public companies, remember you or parts of your organization may fall within the scope of SECR, even if undertaking public or not-for-profit activities as registered companies or companies/LLPs owned by universities, academic institutions, or NHS trusts. You are, however, not required to report under the SECR framework at an organizational level if your organization is defined as a public body or contracting authority, although you may still have other reporting requirements. Basically, what that means is that if you're an NHS trust, for example, you're already following guidelines under things like the Public Contracts Regulation of 2015. But if you have within the your NHS trust a cleaning company, and they are a registered company that falls within the requirements of this, then they have to report. And as always, BEIS does encourage organisations that aren't in scope to report SECR voluntarily. So the next thing is what about subsidies? How subsidies are reported under the SECR framework is different to both ESOS and the closed CRC reporting framework. What's on screen is a summary of what subsidiaries are not to report on the energy and carbon information. If you are reporting at a group level for a financial year for which you are required to prepare a group director's report, when making your energy and carbon disclosures, you must take into account not only your own information, but also the information of any subsidiaries included in the consolidation, which are obviously quoted companies, unquoted companies, or LPs. However, you do have the option to exclude from your report any of the energy and carbon information relating to subsidiaries. And what that means is that if you have a company or an entity or a subsidiary within your grouping that is 10 employees with a balance sheet or a turnover under the threshold, they in their own right would not qualify within SECR, and you could potentially admit them from disclosure. And if you need to fully understand what a corporate group is, you can find it in the Companies Act, but you may wish to speak to your finance director, as they'll have more of information in relation to how your company framework is structured. So what needs to be reported? So I'll leave this up for a few seconds while we discuss it. Much of the information you need to complete SECR can usually be obtained from other schemes you participate in, and that's things such as, say, the closed CRC scheme, ESOS, climate change agreements for some people, and the MHGH reporting framework. Today we're mainly focusing on the right-hand column, but I am happy to discuss the left-hand column at a later date. But usually quoted companies of such a size have the resources to do this and are already doing most of this reporting in-house, whereas companies that fall into the right-hand column may need a bit more support and clarification. You'll see from the third row, what needs to be reported becomes the same across the board regardless. So people can have a read through. Cool. So the question I know on everyone's mind and will continue on everyone's mind is, do I have to do this? Is there a get out of jail monopoly free card? And to an extent there is, and they are called low energy users. And it's pretty much the same for both quoted companies and large unquoted companies, is that if you found that in your reporting period, and we'll come on to that in a minute, that you've consumed 40 megawatts or less within that period, then you're a low energy user, and you just need to make a statement in one of your reports that you are not required to do anything further in relation to SECR. But you must make this statement in your report. There are exclusions from the reports. Should your organisation find that including any energy and carbon information would be prejudicial to your organisation, you can exclude this. But again, you need to make this statement in your report that you are excluding it for whatever reason. The same goes for if you can't obtain certain energy or carbon information. Again, you need to make that statement in your report and include why you weren't able to gather that information. So before we move on to what needs to be reported, I'll leave this up for a few seconds so people can get a more visual understanding of whether your organisation needs to report on SECR. But as you can see, as we move down, we covered whether you're a quoted company or an unquoted company. And then obviously we're looking at the right-hand side of the column is that, are you a large company? If you're not, there's no requirement, but it's voluntary. If you are required, you then have to calculate your total UK energy, and we'll come on to that in a minute. Once you've done that, do you find that you're an hour or less? If it's yes, again, as we just said, you make a statement in the director's report or your energy and carbon report for LLPs or the combined report for charities. If it's no, then you also then have to calculate your associated UK greenhouse gas emissions, which again, we'll come on to. And you need to put that all into a report, and you'll see that there's A, B, C, and D on the screen, and we'll be covering those in a minute, but you need to include that in your report. And then you'll see that you file it with Companies House by the set deadline, and we're moving on to that in a minute as well. And you'll notice that there's no mention of the Environment Agency so far. So when should I report? To give you, there's a couple of examples on the screen, but I'll give you a further example. Is that if your reporting year, for example, is November 2018, your financial reporting year, to October 2019, then your first SECR report period would be November 2019 to October 2020, as it starts after the 1st of April 2019. So when you're reporting, you report for the financial year after the 1st of April 2019. If your financial year is halfway through and the 1st of April comes in, it's the next financial reporting year. And you do it when you do all of your accounts, company accounts at the end of the year. And I should remind people, this is an obligation to disclose annual figures for emissions and energy use. And if you find that your annual period used is not the same as the financial period covered by the relevant report, this must be made clear. And BEIS have said that they would like you to align this with your financial year. But if you can't or do not want to, again, you need to make a statement and make this clear in the report. So who is enforcing the regulation of SECR? It is not the Environment Agency. It is in fact the Conduct Committee of the Financial Reporting Council, where all of our financial information for our businesses go. While this is obviously rolling out in the first year and the second year is happening, the government will work with Companies House and the Financial Reporting Council to support implementation and to monitor how organisations are responding to this new reporting requirements as part of its overall responsibilities to review the impact of the legislation. And again, as I said, it's not the Environment Agency, so the way in which it will be handled is a lot different to what we've seen with, say, ESOS or climate change agreements, for example. And as far as possible, the Conduct Committee does operate by agreement with businesses whose reports it reviews. And I have had a look into this, and to date, it has achieved its objectives without any recourse to the courts. The committee does exercise its functions with regard to principles of good regulation. And it does raise concerns with companies where there is evidence of apparent substantive non-compliance. So in effect, the council, if you've put this report into your end of year reporting and there is an issue with it, they will let you know and they will work with you to fix this. However, if you don't do anything and you don't submit it, then obviously they take that a bit step further. So the information that needs reporting, as I've said before, is what's on the screen in front of you. And again, a lot of this can be found from other reporting schemes. So I would say that's your first point of call for this kind of information. But I'll go through, again, I'm covering the right-hand column, and I'll go through each of these one by one. So the first one, as you can see, if we go back, is UK energy use, and it says as a gas, electricity and transport, including UK offshore area. So again, this is very, very similar. This part of it is very similar to the data you take from ESOS. And the transport data that you'll need is based on the same requirements that's reported in ESOS. So if you go and have a look at the ESOS guidelines, you'll find that the requirements to report on transport are pretty similar to what's being here today in SECR. Some energy that is not in scope is things like unconsumed energy that your organisation does not use or supplies to a third party. It can also include energy consumed outside the UK, and it can also include energy consumed for international travel or shipping. Again, where the journey does not start or end in the UK. However, you can, if you wish, include international travel if you do conduct international travel outside of the UK. And the main key takeaway of this screen is that the report must disclose the figure in kilowatt hours of the annual quantity of energy consumed in the way set out above. So when you do report this information, it must be in kilowatt hours. I've just broken this screen as here just to break down transport in more detail in relation to what should be included, which is on the left-hand side. And the following activities are not required to be included, which are on the right-hand side. And I'll leave that up just for a minute so people can have a read through. But again, it's very, very similar to the ESOS guidance. Cool. So the next one within that table we were looking at is associated greenhouse gas emissions. And this varies for quoted companies and unquoted companies, and we're going to go through these next. I've got there in the middle, it says previous year's figures for energy use and GHG emissions. You don't have to do this in the first year, but you do have to do it in the second and third and fourth and fifth year and so on, is that you have to include the previous year's figures. But again, you don't have to do that in the first year because obviously there isn't any unless you're already reporting as a quoted company. So that brings us on to the GHG emissions. I'm guessing most of you already know most about this, but they are broken down into scopes 1, 2, and 3. And it is mandatory for both quoted and large unquoted companies and LPs to include this scope within their SECR reporting. Again, if you go and get the guidance offline or online from the government website, there is several pages that list every GHG for scope 1, 2, and 3 in there. If I put them all in, we'd be here for several hours. So I would have a look at that yourself. You've then got scope 2, which is mandatory for quoted companies and mandatory for large unquoted companies. You've then got scope 3, and this is where for quoted companies, this is voluntary, but for large unquoted companies and LLPs, some of this is mandatory. Similar to ESOS and the rest of some other frameworks, you can include things like water and waste, but they're currently voluntary. We do think, especially the way it's going, that eventually water and waste might be made mandatory reporting. And I would say that if, as an energy management consultant, I would say that if water or waste plays a big part in your operations, it might be advisable to include that data in your report. The next one within that table is at least one intensity ratio. So as the intensity ratios compare emissions data, there are, again, these are in the guidance, and I've taken a few out to give you an idea, but you can put your emissions against the ones on the screen. There's ones for most main sectors, and obviously this allows a comparison of energy efficiency performance over time. The report again must state at least one intensity ratio. You can use more, and you can feel free to use one that isn't in the guidance that you might already be using within your organization. but again, they want at least one. The next one is energy efficiency action taken. There's not a lot in the guidance that really talks about this. What this means is it's for you to put in the report whether you've actually conducted any actions in relation to energy efficiency, and that can include things like having a consultant go in and audit your building, or that you can say, well, actually, you know, last year we put in LEDs. You can include that in your report, and the government would like to see something in there to show that you have identified savings. But that's up to you at the end of the day. If you haven't done anything, again, you know, as a consultant, I would advise that you either do it in-house or get an independent consultant to come in and identify energy saving measures, because that obviously can save you a bit of money. The next one is methodologies, and this is the final one. So while there's no prescribed methodology under the legislation, organisations are required to disclose methodology. And there's a few that they use as an example on there, but again, you must state in your report what methodology or methodology is used. Again, there's no set criteria of which one you have to use. If you're already using one, you can carry on using that one and explain it in your report. Which brings us on to our report. So there is, again, no prescribed reporting framework. You can just develop your own format to fit in with your business. But you need to at least have the minimum information that we've covered today. What you see on screen is what we put into our reporting. So this kind of gives you an idea of what you, as like a base mark of what you need to put in your report. And I'll leave that up there a minute while you have a quick read through. Cool. And these here are examples of the way in which you could create your SECR report. And I will say this is that your SECR report does not have to be hundreds and hundreds and hundreds of pages. It's the classic keep it simple kind of thing. And get the information in there that's, you know, the base information. There's another image, and these are actually taken from the guidelines. And they are, you know, that if you have a look through the guidelines, a lot of it there is to help you get it done correctly and in the right way without too much wasting of time. And there's another one with example of water. Again, water is currently voluntary, but it is, as I said, you know, we would recommend that you consider adding it to your report. So that's kind of a quick run through of SECR. There's a couple main key, sorry about that. There's a couple main key takeaways to remember is that you qualify, again, if you fall into 2 or more of the criteria, which is 250 staff, a turnover of 36 million, and an annual balance sheet of 18 million. Subsidiaries can report themselves, and that's part of the group reporting. You're classed as a low energy user if you use 40 megawatts an hour or less. And again, you can use data from previous reporting frameworks. 5 covers the you need to put in there, which is your UK energy use, your associated greenhouse gas emissions, at least 1 intensity ratio, energy efficient actions that you've taken, such as audits, changing to LEDs, putting in a new boiler, so on and so forth, and the methodologies used. And again, you've got to make sure you have the right resources in-house or hire a consultant. But if you're already a part of an energy or environmental reporting scheme, then you're already kind of halfway there, I would say. And remember, the SECR will be submitted to Companies House through the following accounts. You know, the environment agency is involved in this. This is purely BASE and reporting through Companies House. If you aren't experienced with Companies House, there is a chance that people will be able to view this report or a slimmed down version of this report. So that is a key thing to think about, because people will now be able to see how good you are performing on an energy and environmental scale. And again, I've put the slide, the flowchart up there, and when we send the slides out, I can send you that flowchart as a single sheet if you require. So I hope that all kind of made sense, and I hope I didn't go